Hi, this is Lara at Elliott Wave Stock Market with your daily analysis for the trading session dated Tuesday 10th of February, recording the video nearly 6:30 p.m. Eastern Standard Time. I was expecting upwards movement. That's what we've got. It's more likely today that a little correction is over and we're seeing a breakout to the upside begin. The short-term target is the same, either 2098 for the main wave count or 2133 for the alternate. I'm expecting to see an increase in upward momentum for the main wave count, but the alternate doesn't necessarily have to see that. So momentum might be a good guide over the next few days as to which one's correct. The main wave count and the alternate see intermediate 5 and complete, and within it minor wave 5 and complete. The main wave count sees intermediate wave 5 as an impulse. We have a 5-3-5 complete up here. This is 1, 2, 3, 4, and the fifth wave is underway at minor degree. Within minor wave 5, which is unfolding also as an impulse, we have 1, a sideways combination for 2, and 3 is underway. At 2140, it would reach 0.618, the length of the first wave. That's the ratio I'm using for the target in this instance because it fits so nicely with this higher target. At 2191, primary 3 would reach 1.618, the length of primary 1. For this main wave count within intermediate 5, minor wave 1 showed the same pattern that I'm expecting to see here for minor 5, an extended first wave, a shorter third wave, and a shorter still fifth wave. We may see the pattern repeated here. Within minute 3, if the second wave correction does continue further, it can't move beyond the start of 1 below 1980.90. If the hourly wave count is invalidated, then this next invalidation point should hold. Let's have a look at the hourly chart where the start of minute 3 here is this point here. Minuet 1 is an impulse, minuet 2 is a zigzag. This is probably more likely today where the third wave begins. At 2098, it would reach 0.618, the length of the first wave. Again, I'll be expecting that same pattern at a smaller fractal. This is also a reasonably likely ratio for this target in this instance if the second wave is over, because it's a very, very shallow second wave correction. So a shorter third wave would still take minute 3 far enough beyond the end of minuet 1 in order to allow subsequent room for downward and sideways movement for a fourth wave correction. Within minuet 3, no second wave correction can move beyond its start below 2041.88. For this idea, if the third wave has begun here, then along the way up, downward corrections should find support at the lower edge of the base channel I'm drawing now around minuet 1 and 2. If this lower edge of the base channel is breached with downward movement, that would be the earliest warning that my invalidation point, moving it up here, is premature and it should be back down here, because a breach of this base channel would indicate that the second wave might not be over. That's still a possibility, but I do think it's reduced in probability today. The target for minute 3 remains the same as at the daily chart level. This is the alternate bullish wave count, which sees intermediate 5 as the other structural possibility and ending diagonal. This one would be contracting, which is more common. The fourth and second waves are somewhat shallow though, but in this instance they might have been forced to be more shallow than normal by support offered from this double aqua blue trend line, which is the traditional technical analysis trend line. The lower trend line began back in November 2011. It's reasonably shallow and repeatedly tested, so it's highly technically significant. Within an ending diagonal, the fourth wave should overlap first wave price territory, and all of the subwaves may only subdivide as zigzags. That's why we have a third wave labelled ABC, because it's a diagonal. The fifth wave should also be a zigzag, and for a contracting diagonal, the most common place for the fifth wave to end is with a slight overshoot of the 1-3 trend line. At 2133, minute wave C would reach equality in length with minute A. Let's look at this idea at the hourly chart level, where the B wave is very likely to be over here. The C wave should be underway. For this idea, the C wave doesn't have to show an increase in momentum beyond that seen for the A wave, and I'd actually be expecting to see divergence with momentum at the hourly chart level if this wave count's correct. So if we continue to get upward movement, but it doesn't show an increase in momentum, this alternate would be favoured over the main wave count. And again, within the C wave, no second wave correction can move beyond the start of its first wave. The invalidation point at the hourly chart level is the same, so there's no divergence between the two wave counts at this stage. And the bull and bear wave counts still won't diverge for several weeks, if not months yet. That's all for me today with your S&P analysis, and I hope that all our members are having an awesome day.